But there is something to be said about hyperfocus because most people that make money on one thing. So it's like Mark Zuckerberg became a billionaire because of his stock in Facebook, right? That's how he became a billionaire, right? And you could say the same thing with almost any of these company CEOs. And, that's how, NVIDIA went up, and all of those people that became millionaires because they were employees from NVIDIA, that was because they had NVIDIA stock. Not because they diversified, because they had NVIDIA stock. And the same thing happened with Apple, and the same thing happened with Microsoft. Where
Microsoft back in the day, yep.
Yeah, a lot of these companies, when they got filthy rich off of one thing. They didn't get rich by spreading it out across but that's also obviously there's more risk involved with that, right? But that some people think that that's better way to go. Like, just focus on one thing and really focus on that one particular thing. And Michael Saylor said something about this. He was like, it's like having a kid that's talented in basketball. If you have a kid that's talented in basketball and they're showing signs and they're promising, you don't get them swimming lessons and karate lessons and tennis. You double down on basketball and you get them personal training, and that there's no benefit in trying to say, okay, well, if you don't make it in basketball, then maybe you'll be a good tennis player, right?
Pickleball player.
Yeah, exactly. Like, you focus on that one thing, right? So what's your thoughts on that?
You don't have to believe me, but remember when I said Warren Buffett said it in the Berkshire meeting, diversification is for people who don't know what they're doing. That's true. Put in chat, what did Rockefeller get rich from originally? Then Carnegie. If you go to the titans of business, they all have hyper concentrated. So I think a lot of times there's the truth that is told to the public to pacify, and then there's the real information that happens behind the scenes. Even for us, me doubling down on Red Panda, you guys doubling down on Earn Your Leisure, that has paid dividends. Zuckerberg investing in Meta has paid dividends. So I think once you find an asset class that works for you and you put all of your money, attention, and focus, and the thing the Cuban has said, you only have to get right one time. You don't need 16 ventures to work. Like, we've been fortunate to have a bunch of things work in our favor, but everything's centered around a core. So when people try and want 30, 40, 50 stocks, I'm like, it's because you don't know how the other ones are going to pan out. Like, I know what the multiple for Apple should be by 2040, and NVIDIA and Microsoft and Vanguard and BlackRock took over crypto. So that's expanded their portfolio. So I think too oftentimes people think when you hear multiple streams of revenue or income, you think it's to do different things, but you have to find to make revenue off of one item in a bunch of different ways. So it's always been the way to go. Diversification is a distraction to tell you from how to really build wealth, in my opinion.
So here's the one caveat, right? Maybe an asterisk. I would say the right diversification, right? Because if we're talking about like the guys you mentioned, Zuckerberg has stock, the employees has stock in NVIDIA, but he's diversified in companies, right? So like, yes, all his nest egg wasn't in Apple, but Apple's his largest shareholder, right? So American Express, Coca-Cola. He didn't try to find 40 different companies. He said, these are my cores, right? This is what I like.
But even in the beginning, going to the 60s when he first built that fund and it took scale, he had 6. Peter Lynch.
So it's not a large majority of companies he's looking at. He's hyper-focused on 5 or 6. And it's like, all right, well, I can focus on these. These are the ones I can concentrate on because I can actually follow them. And we said this for the past 5 years. It's tough to follow 15, 20, 25
it's almost
companies.
Impossible, bro. To actually do all the filings and all. Yeah.
So when people start trading 5, 10, 15, you start getting to 25, 30. There's people with 50 option calls. This is tough to track, right? That's when we're talking about you've over diversified. Now this is becoming something that is not even manageable. You got a core 4, a core 5 or 6. I'll say like 10 to 12 at the most. Yeah, stick with those. All right, and you might just have to wait and just be patient. Like going back to the first time, be patient with those companies. Wait for the right time and execute when it's time.
And even with 2 Tech 2 indexes, people will say, well, if you don't believe in diversification, why use 2 Tech 2 index? What percentage of VRO is made up of tech and what percentage of VTI? If you go look, there's even Hyperfocus there. If you look, there's some diversification because the portfolio managers will switch certain things out, but there's always been a focus on a particular sector. For me, it's been tech. So just double down on the assets that you know that are working and don't deviate from them.
Important.
All right. So, but how many is how many is too many? Because some might say that the theory is like 4 is too many or 6 is too many.
Well,
I think once you get past 10, it's too much.
Yeah.
I think past 10, I think you can manage 4 to 6 with no stress. 8, you start to teeter. Even in trading futures, I told everyone at Red Panda, trade ES, ZB, bond, and the S&P 500. It makes it super easy. Then you got a NASDAQ and UB, which is, of course, the NASDAQ 100 and another bond. Like the simpler the structure is, the better it is to manage. Because most people can't find lightning in a bottle 10 times. If you can, great. But I think 4 is easy to manage. Once you get to 10, 12, 15, 20,
it's too much.
A lot of trouble.